All right, what the heck is going on with the stock of Tech Data, TECD, one of the world's largest wholesale distributors of technology products, services, and solutions? Yesterday, the world's largest supermarket of tech, as I like to call it, reported what appeared to be a mixed quarter. Its stock plunged more than 4%, falling from 93 and change to 89 and change. But then today, upon further review, Tech Data turns around and erases the vast bulk of yesterday's losses, rallying $3.78 for more than 4%. Which verdict is right? Okay, first of all, the quarter was actually pretty solid. Tech Data posted a 28-cent earnings beat off a 217 basis, even as its sales came in a tad lighter than expected, down 1% year over year. A lot of currency issues here. What really threw people here was the guidance, or specifically the lack thereof. The company said it wouldn't be providing an outlook for the next quarter or the next fiscal year because it only recently closed its acquisition of Avnet's technology solutions business, a huge acquisition, and apparently it was too soon to accurately crunch the numbers. Although management did reiterate they believe this deal will ultimately provide a big boost to the company's earnings, which is what we care about. The lack of guidance here and a weaker projection for the whole industry environment spooked a lot of investors out of the stock. But then this morning, the analysts who cover Tech Data at Needham upgraded the stock hold to buy, saying the pullback creates a buying opportunity with a company with impressive execution. Unfortunately, the window closed pretty quickly as the stock came roaring right back, now less than $1 below where it was before it reported. I think this is a situation where we got to dig deeper. So let's check in with Bob Dutkowsky. He's the longtime CEO of Tech Data. Learn more about the quarter and his company's prospects. Mr. Dutkowsky, welcome back to Mad Money. Good to see you, Bob. Have a seat.
How are you? Good to see you.
Well, first of all, let's not bury the lead. The operating cash flow here was $650 million, which was an incredible number, and it shows me that however big the acquisition is, you can pay down the debt pretty early for it.
Yeah, we hope to get that debt paid down in the next 18 to 24 months, and our goal is to keep our investment grade rating with the agencies. They understand our plan, and we've reviewed it with them, and they're very comfortable with not only the debt, but our plan to pay it down.
And the reason I start with that is because the acquisition you've already said is accretive. It was clear that you could not yet talk about it. Everybody who knows accounting knows you can't. But what it tells me is that for very little money, since you can pay down, you've able to really get a footprint in Asia and really kind of dominate where before you were going head-to-head on at least 20,000 clients.
Yeah, and the other thing that the acquisition helps us do is balance out the Europe and the American footprints.
Yes.
You know, if you recall, we used to be 60% Europe,
64%,
40% the Americas, which is kind of not what Fortune 100 companies look like.
Right.
The acquisition balances that, and it puts us in Asia Pacific.
Right.
So it ticks a few of the strategic objectives our board set out when we thought about finding a transformational acquisition like Avnet was.
Now, one of the things that I think people got confused on the call was that you said that the industry could be flattish. You did not say Tech Data could be flattish. But I was surprised that you didn't think that, given how Europe's kind of coming back, Asia doing a little better, that you didn't expect for more IT spending in the fiscal year.
You know, one of the things that we have the privilege is of being partners with the titans of the tech industry.
Apple, EMC, HP.
And if you just go down that list and average them all together, the kind of quarter they reported recently and their outlooks for the industry going forward, it's flattish. And so your earlier point is key, Jim. There are pockets of strength inside IT spending. The cloud is growing double digit.
Yes.
In the tech data environment, our small business arena, SMB, has grown double digits 9 quarters in a row. So we find those pockets of strength, and that's where we focus.
But I guess what consumer electronics is just, just not. It's 3%. Consumer electronics is just not going anywhere.
Yeah, and we invest sporadically in consumer electronics. Our real strength is in the IT side of the world. But it's interesting because, you know, in the long run, those lines are blurring between what's a consumer product, what's a business product, what's an enterprise product. And that's part of what we tried to accomplish with the acquisition of Technology Solutions, is to blur those lines and build an end-to-end distributor. Like we like to say, from the living room to the data center. And we think that that's a very defendable position for us to have for a long time.
Right. Now, I will challenge you. I think that's going to grow better, but that's my own predilection because I think the world's doing a little bit better. But yes, you know your end markets, you know the clients. So I hesitate to challenge you on it. But.
And the beauty of a tech data model is that if it grows, we can scale and keep our cost structure consistent. And so therefore, that's when we have these kind of large performances for a quarter.
You emphasized several times that you're the third platform technologies that you're focusing on. Could you just explain that to me? Because tech data is not as simple a story as it used to be.
Exactly.
Okay, fair enough, right?
Yeah.
And third platform technology kept coming up, and I want people to understand what that means for you.
So technology has emerged over time. The original manifestation of technology was the mainframe, and that was the first platform. Then the PC was the second platform, and it had a nice run, and computing was expanded to reach lots of people. The third platform are these new emerging technologies like converged and hyperconverged, like the cloud, like mobility, like big data and analytics. And all of it is underpinned by security. And so those are the areas that we believe that we need to make substantial investments in, because all of the data says for the next 10 years, that's where the growth in IT spending is going to be, in those areas.
All right, one last thing, I circle back to the operating cash flow. It would have been natural for me to say to you, would you do a giant equity offering to pay down debt? But it sounds like that is not what's in the cards.
No, we're just going to use the operating cash flow of the business to be able to pay down that debt. And we're very comfortable with our ability to do that.
Why do you generate so much operating cash flow?
It's a combination of a lot of things. We buy and sell, and the terms that we get on the buy and the sell. You also have to look at all that cash flow as a moment in time.
That's fair.
Versus a running average. But suffice it to say, the tech data model does throw off cash. And so therefore, that's why our board was comfortable to lever the business up, make the acquisition, because we knew we were going to be able to pay that back down.
Well, that's why, I've been a huge supporter of your stock, and that's why I'm so confident this is a great time to buy. I wish we'd have been on last night, so I'd like to get in before the Needham upgrade, but this is just a terrific acquisition that you made. Okay, that's Bob Dutkowsky. He's the CEO of Tech Data Corp. You can go through the notes, but this acquisition, I think, is going to turn on the Jets for later in the year. And you need it, because you just heard that things are kind of flattish overall in the industry. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.